Let's talk about hybrid strategies and how these four strategies are blended together. It's not as straightforward as saying, oh, this is one type of strategy or another, because the strategies can be combined in different ways. Great example of this is in the opportunity zone investment strategy. This is a tax benefit that allows investors who've had short or long-term capital gains to invest into real estate and avoid significant taxes while also getting the benefits of the underlying real estate investments. The reason why the strategy is a hybrid is because the program, based on the IRS guidelines, requires us to do heavy renovations, adaptive reuse, or ground-up construction, which is opportunistic real estate investment. The most risky in the category, but also the type of investing that has the highest upside and the highest rate of return. You combine that strategy in our fund, as an example, with a core level of debt. So we're borrowing 50% or less against the value of the assets, using the lowest level of debt in the real estate risk profile with the highest level of risk on the execution side, which creates a blended rate of return that's both attractive to investors and also gives them the feeling of safety that they're not putting their capital at that high level of risk. Using a hybrid strategy, you start to create what we would call a development to core strategy, where you're building from scratch, you're stabilizing the asset, and then you're holding them for cash flow, all within the same fund. And in our Opportunity Zone fund, that's a great example of how we do that. By doing that strategy, you start out with an investment that is going to grow in value and build value for the first 3 to 5 years, where you could expect to see a significant growth in the valuation of your investment. And then you end with investment in the last 5 years that's a consistent income producing investment and a passive income engine for your portfolio. All of this combines to create also a savings in tax, which is one of the most detrimental components to an investment portfolio in terms of your total return. Hybrid strategies help us manage risks. One of the best ways to think about that is going back to the core plus strategy. This is a strategy where we're using core assets, we're using a little bit more debt, we're maybe doing some renovations or some management changes along the way, kind of a blend with the value add strategy. That's what creates the core plus strategy in the first place. It in and of itself is a hybrid strategy. All of these things are designed to maximize, as an investor, your experience, your cash flow, your upside in terms of appreciation, and your risk management. When an investor comes to Caliber, they're usually seeking to grow their wealth, they're usually seeking to produce regular income in their portfolio, reduce taxes, or typically a combination of all those things. Hybrid strategies allow us to produce those outcomes by using the best of what we know in terms of how to execute on a real estate investment to produce the outcome that you're looking for.